Hey, what's up everyone, and welcome to the channel. If you're here for the very first time, I just want to say thank you, genuinely. Starting something new is always a little nerve-wracking, and the fact that you clicked on this video means a lot. This channel is going to be dedicated to breaking down real market data. No hype, no fluff, just honest analysis that actually helps you understand what's moving in the financial world and why. And I can't think of a better topic to kick things off with than what's happening right now in the silver market, because honestly, it is one of the most fascinating stories in finance right now. Silver is sitting right around $93 an ounce as we speak on March 2nd, 2026. And the question everyone is asking is $100 next? That's exactly what we're going to break down today. And I'm going to include something that most financial channels are completely ignoring right now. How the escalating conflict between the United States, Israel, and Iran could completely change the dynamics of this entire market. So if that sounds interesting to you, stick around because this one is worth your time. Before we dive in, I just want to set the tone for what this channel is going to be. I'm not here to tell you what to buy or sell. I'm not a financial advisor and I'm not going to pretend to be one. What I am going to do is take real, fresh market data, explain it in plain language, and give you the kind of honest, balanced analysis that helps you form your own view. That's the whole point. So if that's the kind of content you've been looking for, hit that subscribe button right now. It's completely free, and it means you won't miss a single video going forward. All right, now let's get into it. Let's start with what just happened in the silver market, because the last 60 days have been absolutely extraordinary. On January 29th, 2026, silver did something it had never done in its entire recorded history. It hit an all-time high of $121.67 per ounce. That is not a misprint. Silver, the same metal you can still walk into a coin shop and buy, was trading above $121. And then, in one of the most violent reversals the commodity markets have ever seen, it crashed. Within just 8 days, silver fell nearly 47%, bottoming out near $63.85 on February 6th. If you had bought at the peak and sold at the bottom, you would have lost almost half your money in less than 2 weeks. That's not a normal market. That's extreme volatility, and it shook a lot of people out. But here's where the story gets genuinely compelling. Silver didn't stay down. Since that February low, it has staged a 32% recovery and is now pushing back up toward $93 to $94 an ounce. Silver futures, specifically the March 2026 contract, are up more than 25% year to date. So even after everything that happened, even after that brutal crash, silver is still one of the strongest performing assets of this entire year. And that tells you something very important. This isn't just a speculative bubble. There is something real and structural happening underneath the surface of this market. And that's what I want to spend the majority of this video explaining. Let's talk about supply and demand first, because this is the foundation of the entire silver bull market. And it's the part that most mainstream financial media completely ignores. Silver has now been in a structural supply deficit for 5 consecutive years. What that means in plain English is that every single year since 2021, the world has been using more silver than it produces out of the ground. In 2025 alone, demand outstripped supply by roughly 95 million ounces. And when you total everything up since 2021, the cumulative shortfall has now crossed 820 million ounces. To put that number in perspective, 820 million ounces is roughly equivalent to an entire year of global silver mining output. The world has essentially burned through a full year of production just trying to keep up with demand. And for 2026, analysts are projecting a 6th consecutive deficit of around 67 million ounces. The hole keeps getting bigger, and new mines take years to develop. You cannot solve this problem overnight. Now the obvious question is, where is all this silver actually going? The real driver is industrial consumption, and it is relentless. Think about solar energy for a moment. Global solar panel installations hit a new record high in 2025, and that momentum is accelerating. Every solar panel requires silver, and here is the critical detail. There is currently no viable substitute for silver in solar panel manufacturing at industrial scale. Researchers have been working on alternatives for years. They haven't cracked it. So every new solar farm, every rooftop installation, every utility-scale renewable energy project anywhere on the planet is consuming silver. Then you layer electric vehicles on top of that. EVs use significantly more silver per vehicle than traditional combustion engine cars, and adoption is accelerating across every major economy. Tens of millions of additional ounces of silver demand are being created every year just from the EV transition alone. And then there's artificial intelligence. The AI infrastructure boom requires massive amounts of data centers, semiconductors, chips, connectors, and circuit boards, all of which use silver. The AI revolution is quietly one of the most powerful demand tailwinds the silver market has ever experienced, and most people haven't made that connection yet. Now I want to spend some real time on something that I think is genuinely underappreciated in most silver market discussions right now, and that is the geopolitical situation involving the United States, Israel, and Iran. Because this isn't just background noise. This conflict has the potential to completely reshape the dynamics of the silver market, and understanding how requires connecting a few dots that most people aren't connecting. Here's the core of it. Iran sits in the middle of one of the most strategically critical geographic zones on the planet, the Persian Gulf and the Strait of Hormuz. Roughly 20% of all global oil supply passes through that strait every single day. Now you might be thinking, what does oil have to do with silver? More than most people realize. When oil supply gets disrupted, energy costs spike globally. When energy costs spike, the cost of mining silver, which is an extremely energy-intensive process, goes up significantly. Higher mining costs mean tighter supply margins, and tighter supply margins in an already deficit market push prices higher. That's the first channel through which this conflict affects silver. The second channel is the safe haven demand channel, and this one is more direct. Every time tensions between the US, Israel, and Iran escalate, every airstrike, every sanctions announcement, every threatening statement from Tehran, investors get nervous. And when investors get nervous about global stability, they move money out of risk assets and into hard assets. Gold moves first, and silver follows. But here's the thing about silver that makes it different from gold in this kind of environment. Silver has both the safe haven appeal of gold and the industrial demand story running simultaneously. So when geopolitical fear spikes, silver gets a double boost that gold doesn't quite get in the same way. It gets bought as a safe haven, and it continues to be consumed by industry at the same time. That's a uniquely powerful combination. The third channel is what happens to the US dollar and global financial markets in a serious escalation scenario. If the conflict between the US and Iran were to escalate meaningfully, think military strikes, retaliatory actions, regional proxy conflicts intensifying, you would likely see a massive flight to safety across global markets. Equities would sell off. Emerging market currencies would come under pressure. And while the dollar might initially strengthen as a safe haven, the longer-term consequence of a major Middle East conflict would almost certainly be inflationary. Higher oil, higher energy, higher food prices, more government spending. And that inflationary environment historically benefits silver enormously. Silver has been used as an inflation hedge for thousands of years for a very good reason. It works. Now let's think about the scenario where things actually de-escalate. If the US, Israel, and Iran reach some kind of diplomatic understanding, a deal, a ceasefire, a reduction in tensions, what happens to silver? Here's the honest answer. In the short term, you might see a pullback in the safe haven premium that's currently baked into the silver price. Some of the fear-driven buying would unwind, and silver could dip back toward the $80 to $85 range temporarily. But, and this is the critical point, the structural story doesn't change. The supply deficit doesn't disappear. The solar demand doesn't slow down. The EV build-out doesn't stop. So any de-escalation-driven dip would likely be bought, because the fundamental floor underneath silver is genuinely strong right now. The geopolitical tension is adding fuel to a fire that was already burning on its own. There's also a fourth dimension to this conflict that almost nobody is talking about in the context of silver markets. Iran is one of the world's significant silver-producing nations, and broader regional instability affects not just Iran, but neighboring countries that are part of complex global supply chains for metals and minerals. Any sustained conflict in the region creates uncertainty around physical commodity flows, shipping routes, and insurance costs for cargo moving through the Middle East. That uncertainty alone, even before a single mine is disrupted, tends to push commodity prices higher as traders price in a risk premium. We may already be seeing some of that risk premium built into the current silver price, and if tensions escalate further, that premium has room to grow significantly. Let's now bring in the technical picture, because the charts are telling a very interesting story on top of everything we've just discussed. A developing cup and handle pattern is forming on the daily silver chart. The cup started with the big rally in November 2025, peaked at $121 on January 29th, sold off hard into that February low near 63.85, and has since been recovering steadily. The shape of that recovery looks like the handle forming on the right side of the cup. A clean breakout above the $92 to $95 range, where we are right now, would be a significant technical confirmation of the next leg higher. The key price levels to watch are straightforward. On the upside, $100 is the first major checkpoint, psychologically and technically. Above that, $121 is the all-time high retest. A successful breakout there opens the door to a Fibonacci extension target around $136. On the downside, $75 is the critical line. A daily close below 75 cracks the cup structure and likely triggers a retest of 71. The gold-silver ratio sitting at 60 is also worth monitoring. If it starts compressing with silver outperforming gold, that's historically a sign that the silver bull market is gaining serious institutional momentum. So what happens next? The bullish case is silver consolidates here, breaks 100 with strong volume, and the combination of the structural deficit, industrial demand, Fed rate cuts, and geopolitical fear drives it toward the all-time high retest. Bank of America has projected silver could reach $135 to $309 per ounce. CoinCodex's algorithm targets $100 as early as March 7th. Even the conservative JP Morgan projects silver averaging $81 for the full year, and we're already well above that. The bearish case is dollar strength, geopolitical de-escalation, and technical failure below 75 brings us back down to that range. Both scenarios are possible, but the weight of the evidence right now leans heavily in one direction. Here is the honest bottom line. Silver at $93, with 5 consecutive years of supply deficits, record industrial demand, a Fed moving toward rate cuts, and a geopolitical situation involving the US, Israel, and Iran that could escalate at any moment. Every single one of those factors is pointing toward higher prices. $100 is not a question of if. Based on everything we can see right now, it's a question of when. Now here's where I genuinely want to hear from you. And since this is the very first video on this channel, your comment right now means more than you know. Drop your silver price prediction for the end of March 2026 in the comments below. Do you think we hit 100? Do you think the Iran situation escalates and sends silver even higher? Or do you think a diplomatic resolution cools things off and brings silver back down? Every comment gets read. I want this channel to be a real conversation, not just me talking at a screen. If this video added value to your day, please hit the like button. It helps this brand new channel reach more people who are looking for exactly this kind of honest, data-driven analysis. And if you want to be here for every video going forward as we track this silver market in real time, subscribe right now. We are just getting started, and I promise you, this is going to be a channel worth following. I'll see you in the next one.